Charlie, really. Just to talk a little bit about some of the kind of adjustments that I've made with my trading strategy, with my scalping strategy over the past couple of days, really, and it's really helped. So I've had a 100% win rate with this strategy for the past 3 days. I've not lost a single trade. Trade in Great British Pound JPY, and I was never really a massive fan of this pair, to be honest with you, because it's so grabby. Like I won't trade USD JPY very much, but I think I might start, to be honest with you, start trading this a little bit more, just because it's as I say, they're really volatile. They give you like really nice price action. It's really good to, like, they're really easy to scalp. And it does actually follow the price action quite it follows the price action quite well, especially when you're kind of working off the higher time frame key levels, and taking into some of the higher time frame candlesticks with this with just scalping. So with this, we can see here, like these are just two trades from last night, and I'm just gonna break this stuff down, actually. So I'm gonna break down every trade. This wasn't taken. This was planned. This was I think it was planned, but I didn't end up taking the trade because I was just about to go to sleep. Then I woke up. I had a horrible night's sleep. But yeah, so I took this. But I didn't exit there. I think I exited about here, and taken this morning, and I've also taken this as well. So it's kind of just taking into account a few principles here, okay, and just some of the general knowledge from the market that I've got. Now, what I have started doing is taking profits earlier, and also extending my stop losses. You should be really aiming for like a 1 to 4 as a minimum risk to reward ratio. But someone said something to me. I didn't say it to me, but I saw it on a reel recently, and it kind of made a lot of sense because it's something that I was really struggling with in my strategy, especially when it came to liquidity grabs and trading on the 1 minute time frame. So what they said is getting stopped out is so bad for your for your equity curve, because it ends up being death by 1,000 cuts. And that really stuck with me because it's something that I've been struggling with for maybe a couple of months, getting into a position, re-entering it, because it's grabbing my stop as liquidity to help move it. And yeah, and the other thing that I've really only just started taking into account, and it's something that I used to take into account, but it's something that I hadn't been taking into account recently, was just your candlestick closes. Now, I take candlestick closes into account on the 5 minute and the 15 minute, but I haven't translated that through to my lower time frame trading. So we're just going to break down what I've done here and how I've traded this. Okay, so we've had this huge gap down here. Okay, and we're going to look at the higher time frames on this. We'll start off on the higher time frames. Now, for me, when I was looking at this short before I got stopped out with this liquidity grab on Friday, I know that there is strong buying going on along this trend line. You just, so you know, that's the target. What most people do is they'll put their target down there. Now, I don't think that is really the smart move. You just want to kind of try and get two confluences. So you want to look at where the liquidity is. So we're looking at like this area here, for example. And I don't, it's not really going to go down there because you've got two areas of buying here. So you've got the sell side liquidity here, and then also you've got this trend line liquidity. So you know there's going to be buying going on around that area. Now the tariffs came out last night, and we had a huge gap down of like 1% on Great British Pound JPY. Some of the other pairs were even worse, like AUD JPY was I think 1.3%. So what's generally going to happen after this? So we've had this massive gap down in the market. Most of the time that gap will get filled, or at least it will be partially filled. We've also hit this area of liquidity here, and this area of liquidity here. So what we're most likely going to see is buying going on. So I entered the trade really early on this. We had this big bullish, these big bullish candles, followed by a pullback, and then we just had like this little trend line, right? You can just see the price is bullish. So I took a long just as I started to see the breakout. Now if we go down to the lower time frames, we can see a little bit more here. We can see a little bit more here on the lower time frames, and I can find it. Yeah, cool. So what we've seen here is we have seen this kind of pullback here, and then this candle has really just engulfed this other one here, and we kind of know, like, right, okay, well, we know the price is going to go up. We just need to really look for the entry, and there's no candles here that are bearish that are engulfing these. So you know, all of the candles that are closing are you know, candles that are buyer candles, buying signals. And then I've simply just looked to exit the position when I've made a decent amount of money. To be perfectly honest with you, I'm not massively taking R into account. Like, all of these have been going straight into profit. This was a $1,200 trade, and it was only really a small lot size. This was only I think it was 6 lots. And then it was good because then we've had this consolidation, and realistically if I hadn't exited the trade, I would have just got stopped at a break even here. So I'm trying to, like, especially with my scalping at the moment, just always be taking profits, because sniping these positions on the higher time frames, you just get these grabs. And then, as I say, we kind of like continue moving on here, and we can see that price is still bullish. It's broken above this level here, and it's just kind of consolidating, and we know where the next target's going to be. We know that, you know, prices managed to break above this and also close above this, so we know price is bullish, and this is going to be the most likely target for the next set of buys. So if we go down to the lower time frame again, go down to the 1 minute, we see here that, okay, buying's come down, all very, very bearish, but we are looking for buys because we still haven't wiped out this area of liquidity up here. And then we get this engulfing candle, here, we get this bit of indecision, and then we still manage to close above this bearish candle, we close above this bullish candle here, and then we just know that that's the entry, because if we look, you know, we can see it on the wicks, we can see, you know, to the left here that this was quite a strong area of support when we had the reversal, and also that we've got it there. So we're just looking to target that and see if we can wipe out this liquidity. There's no harm in even leaving there, and I know it's only a 2.75 risk to reward ratio, and we all love hitting like these 10Rs and stuff like that, but you know, I just think for me at the moment, having the widest stops is just really, really helping, especially considering I'm trading the 1 minute time frame, and it's made me so much more consistent over the space of like 2 or 3 days. Now I know obviously this has got to be back tested and you know, traded for a month, but I still don't think there's a massive issue there. And we can then see here as well. So we then basically, we're looking to just take into account all of these things, just for a little bit of added, just for extra added confluence, you know. So when we get here, we get these wicks off on we get these wicks on the 5 minute, and then we see, after we see the rejections, we then see a bearish candle basically close below this one. Then we see a bullish candle, can't close above that one, and then we've got a bearish candle that is closing above, closing below, and you kind of just know, okay, well, this is, you're going to get a rejection off that level. It's so important on the higher time frames. So you're just looking for, a structure shift. You're going to get a reversal as well. You're probably going to retest this level. So you just put your limit order there, or you just get your entry there, or even there. We've got this big move down. Try to go above it. Then we've got, like, as I say, just a pennant form. We know that this is a key level here. Let's have a look and see. Oh, fuck off. It just keeps moving it about. Yeah. So, we've kind of had these indecision candles here. We've had a doji, so we're looking for a reversal. We just want to make sure that, if, for example, this is going to be a reversal, that we get a close above this level here. We get a close above this support. If we don't get a close above that support on the 5 minute, then it's going to move it again. If we don't get a close above that on the 5 minute, and especially the 15 minute, then it's no longer gonna happen, is it? And also, something else to take into consideration is, I know you're looking here at multiple time frames, but just having that higher volume gives you added confluence. Closes on the 15 minute are quite important, just as when you're trading the hourly, or when you're trading the lower time frames, closes on the 15 minute are important in my opinion. If you're trading on the hourly and the 4 hourly, closes on both of those, candle closes on both of those are really, really important as well. I have no idea how, you can just move to the lower time frames and have it not move on you. But yeah. So then we see these, we see that it's being rejected on the 15 minute, and you should then just look for your entry, and your entry is really just your pennant here, your whatever you want to call it, like rising wedge or bearish wedge, but however the fuck you want to call it. There's even like a fair value gap here that the ICT traders will fucking love. There's a break and retest of support, however the fuck you want to look at. And then where are you looking to target? You're just looking to target this fucking level here. Do you know what I mean? You're not looking for, it doesn't need to be a massive trade, and then all of a sudden you've got yourself just a nice little 8R. A nice little nearly a 4R here, a nice little 2R here, and just putting your stop above the previous high, instead of there. That makes that trade so much more fucking stressful, having that trade or that there. Well, it does for me anyway. Just having it above there, So if a wick wants to come up and try and grab you, then you're a little bit more protected to it. As I say, instead of then having that money go from your account on the -1R, and then just having your money go from that -1R, and then having to re-enter the trade, and it also fucks up your psychology. Well, I've just been stopped out, do I really want to re-enter the trade? And then here, same again. So what I would usually have done, and I'll be completely honest with this, and it's fucked my account so many times, is when we're trading this, we can see that we've got this trend line, and technically we're in a consolidation, but I still think that to get the reversal, we're going to need to tap that level again. we've broken above it here. I think there was even a break on the 5 minute candle at that moment in time. No, not quite. So there wasn't really the break on the 5 minute candle. There wasn't a strong body close above it. When we get this strong body here, once, so we can see that price is reacting off it. We can see that we're getting this wick here on the 5 minute, and then we've got this, really nice strong candle. This really nice strong candle close, and then we know, okay, cool, we can enter it, and also then we can look to target the liquidity up here. You don't need to make it the full target. I always recommend I think personally just putting your take profit slightly below liquidity is better, because you don't get the reversal. And hey ho, you've got a 2.15 risk to reward. Okay, that's a big stop, but you've placed it below the previous lows, and it's only, as I say, it's only just something I've really started doing recently, for this reason. Also, we had a look at the 5 minute candle and we saw this engulfing up. We saw the engulfing up there. Now, the reason why I have stopped entering on these break and retests here is because I always get stopped though on the liquidity grabs. One of the other reasons for this is because we aren't seeing any strong candles. This bearish candle is engulfing that bullish candle, so I don't think that that's a good entry personally. Now, when we start seeing more buying volume, for example, this bullish candle here, this is engulfed that. It's closed below this level. That's a very, very strong buying candle. Okay, cool. Then we've got a good entry. Same with this. So here, we're just waiting on basically this consolidation break, and you can see how lovely this price movement is now today. This is ranging like 51 pips. This is really, really nice price action to be able to trade. So what we're looking at here is we're just looking at this to be used as a form of resistance. So we've had the trend line break, we've then had the consolidation. If we go over to the 5 minute chart, we can see here that price is closed below it. I think it closed below it on the 15 as well. Yeah, we had a small close below it, and then price is making the decision. We've had a doji candle here on the 5 minutes, so I'm not going to enter here. I'm now not entering on retests unless I'm only entering on the bearish candle on the lower time frames, on a bearish signal. Like for example, even here on the 5 minute, if this 5 minute closes below this, then we probably know that we've got a selling signal, and price will continue to go down because it's engulfed it. But yeah, so once then we could go back to the 1 minute. We can see here that price is rejected off it, and the entry is really just if price has managed to close below this bullish candle. I'm not interested in entering anywhere else because we've kind of got like this small area of support, so I'm not going to be entering there because that could just reverse up and grab the liquidity. Once we've closed below this candle with a bearish candle, then I know there's an entry there, and then you can just see price move down. You can just see price move right down, and then yeah, just you can look to target whatever liquidity you want. Even if you're less comfortable, you've got the 1 hour there. You've then got I would mainly really look to target there. It's the 3R. If you're risking $500, you're still getting a 3R. That's $1,500 in the space of like 5 minutes. Trail your stop as you get to that liquidity for maybe a 2R. See if price continues to go down. However you want to, whatever your exit model is. But when you're seeing volume like this, you're seeing these fucking huge candles, and it's just one after the other. You kind of know you're probably going to go down and reach some of that liquidity there. So yeah, it's all with scalping at the moment. I've just switched more to a model where I'm taking all of my trading knowledge into consideration, and I am just applying candle closes as the main confirmations. And generally what I'm finding now is, instead of waiting on these retests of these levels, these breaking the retests of these levels, um, waiting for a little bit further confirmation is just working absolute fucking wonders for my balance. You know, I'm taking like $500 trades, or you know, I'm taking like $1,000 out of the market in the space of 10 minutes, just so much more regularly. And it is literally just a case of waiting on the candle closes, um, instead of having to, or instead of really trying to snipe those positions. So, you know, if you're kind of locked in and you're going, okay, I'm gonna be trading this for the day, this has got some nice volume, and stuff like that, then you know, you've got 2.5R, you've got, just call that, we'll call that 6.2R, 11, you know, 14, 16, you got 20R there just from scalping throughout the day, and it is working absolute wonders. Instead, and also you can see here you've got your kind of daily range. It's just working absolute wonders, instead of trying to get in this long position here and then just holding it up until that point, just being in and out the markets, you know, just treating this as you would on the higher time frames, not setting goals too far, and just entering the positions and then exiting the positions, you know, kind of quickly. And as I said, just the engulfing, you're waiting for the kind of engulfing candles and waiting for candle closes, instead of trying to snipe the retest. Yes, it's good, as long as you have an idea of where you think price is going to be going in either direction. So just to recap, as I said, we had the gap down. We know that this is a key level, so we're going to try and fill some of that gap. So we just we make sure we get into a buy at a reasonably good price. We sell it off because when we get a big move, we know there's always going to be a consolidation. We don't want to be in the consolidation phase. We wait for price action to be quite good again, and then we get back into another trade. When we've hit a certain level, we can then straight away look for the reversal, or you can then do one and done, or two and done, three and done, however, you know, go, okay, well, I'm done trading for the day now, I've had a good day, however, whatever your trading plan is, or your psychology. And then, yeah, just trading a little bit more. We've got the level up there, we've got the trendline break. I mean, it's all basic price action stuff, but it's all just accumulated kind of into one. So we've got higher time frame support and resistance, we've got consolidations, we've got engulfing candles, we've got the candles closing above one, a candle closing above one another, ensuring that we're taking daily bias into perspective. We've got a trend line trade here. We've then also got a breakout of the trend line here as well. So it's just a combination of everything, but really the main part now of the entry model is just waiting on that candle close, that engulfing candle, not entering too soon. For example, not entering here because that candle's just engulfed that, and we are consolidating. We've seen a big volume buy candle there, cool, so we can get in. But yeah, hopefully, fucking hell, 24 minutes this video. But yeah, hopefully this helps the entry and exit model that you guys are looking at, or however you're trading it. And yeah, it's kind of annoying that we're not hitting these big +9 R's, or we're not hitting these +9s or whatever, but you know, when you kind of compound these across the day, it's just working so much better. And if you've got a pair with really nice volume, like we have on Great British Pound USD, then it's absolutely fantastic, isn't it? But yeah, if you've got any questions, or you think there could be improvements made, then just let us know in the comments, and or in the group or whatever, guys.